Hey guys, Matthew Morrow, MorrowInvest.com. I'm bringing you today's 2-minute tip of the day. Now I get asked this a lot, and it makes a lot of sense. I get asked, how do you evaluate whether a business or an opportunity is a good deal or a bad deal? Now, for me personally, I do not pay for potential. So if I look at a property, and somebody has figured out the cap rate on some office building or an apartment complex or something, and they say, oh man, this place is worth $1 million. And I say, well, that's great. Show me your net income. Show me your spreadsheets. And they say, and they've got spreadsheets up for days. And then I say, so once I actually see the place is completely dilapidated. Nobody's lived there for 5 years. And I say, hey, how did you come up with a cap rate if you don't have any net operating income? Well, that's pro forma, which means what it could be. And they'll sell you on what it could be. Man, if you would just put $500,000 into this place, it would be something else, and you could really make a lot of money. So let's stop for a second. Use your brain. Use some common sense. Know what your goal is, and you need to know what it is you're trying to accomplish, how fast you want to accomplish that goal. Do you want to make 2%, 6%, 20%, 50%? What percentage do you want to make? How much money do you want to make? How fast do you want to make it? And in what type of risk are you willing to take in order to get that money and get that return? Sometimes, just because it's very risky, you don't want to do it. But there are some very safe investments that make a high return as well. And normally you would think, well, the higher the risk, the higher return. Well, a lot of really good investors, really good ones, have low risk, still have really good, strong, high returns. I'm talking even 20 and 30% returns on a regular basis. Repeatable. That's important. It's repeatable. It's not just some big fish. Man, this one time we did this deal and we got this thing this one time. This is a repeatable business that you can make really good returns in and not have yourself exposed to a lot of risk. So there's lots of different ways to judge a business from being good or bad. It might be a social thing. How many people does it help? It might be a financial thing. How much money does it make? Sometimes just because it makes money doesn't mean I want to be investing in it. If it's something that takes advantage of people, if it takes advantage of the poor, if it hurts people, if it does more damage than it does good, why would I want to be a part of that business? So just because it makes money doesn't necessarily mean I want to do it. Just because something's legal doesn't mean it's right. So that's going to be up to you to judge. I know for me, I'm not going to be involved in any business that doesn't, that conflicts with me morally. So again, we've talked about I have a Father in heaven that I pray to for my blessings. So I would never want to do a business that was unethical or wrong in order just to make money. That's not a good way to do it. There's more important things than money. I'll say that again. There's more important things than money. Okay, so when you're deciding what's a good investment and what's a bad investment, that's going to depend on you, your personal goals, how much risk, how much reward you want, and the time frame you want it in. And it's going to be up to you to evaluate those things. For some people, they'll say, well, I want to purchase this house in this area because that's the high-end neighborhood, and only high-quality people with good credit are going to be in that place. And I might say, well, that's fine, but you're going to cash flow nothing. You're breaking even on a property that's $200,000, and what's your goal? Because you're not going to be able to get any money off of that place for 30 years, right? You're going to break even for 30 years, like that's your goal. So you have to make sure, it might make sense to do another investment in that case. I mean, people come up with all kinds of ideas, and it's so funny to me because a lot of times they'll say, well, Matthew, I want to do something really safe and I want to make a good return, and so we'll talk, and I'll say, oh, well, you want a solid rental property that pays you every month. And they'll say, no, I want to flip. And I'll say, wait a minute, a flip is the opposite of what you just told me. A flip, as we've talked about before, you got to hope you bought it right, hope you got your repairs right, hope the inspection did right, hope you get to sell it in the amount of time you got it for the price you wanted to sell it for. There's just so much risk. And then when you get that money, you've now put yourself in the highest tax bracket with the short-term capital gains. So that is the opposite of you want low taxes, passive income, lots of write-offs, and a solid regular income, right? So you just have to know what your goals are and what you're trying to accomplish. I hope I can help you with that. If you have any questions, email me. I'll be glad to help. Hope you have a blessed day.